for the following county assemblies: Marsabit, Wajir, Meru, Siaya, Busia, Murang'a, Baringo, Kakamega, Makueni, Nyeri, Tana River, Nyamira, and Kericho. And Mr. Speaker, Volume 3, laid on the table of the Senate today, Tuesday, the 31st of March, 2026, for the following county executives: Turkana, Tana River, Makueni, Tharakanithi, Nandi, Siaya, Murang'a, Nakuru, Marsabit, Samburu, Nairobi City County, Homa Bay, Kisumu, Wajir, Migori, Baringo, Kiambu, Lamu, Nyamira, Uasin Gishu, Busia, Isiolo, Kirinyaga, Kisii, Kajiado, Kericho, Kakamega, Kilifi, Garissa, Mombasa, and Taita Taveta. Mr. Speaker, sir, as I move this motion, I want to direct members of the Senate to the electronic devices we have, that all these reports can be found there. Volume 1, which was for 16 county executives, was laid on the table last week on Thursday. Volume 2 and Volume 3 have been laid today. And Mr. Speaker, on behalf of the Public Accounts Committee, I beg the indulgence of the House. Ideally, we should give members some time to go through these reports before we move the motion. Unfortunately, we have a constitutional deadline today, the 31st of March. Mr. Speaker, allow me to very quickly move this motion as members look at the specific reports from their counties and say that today I have good news and bad news. Mr. Speaker, because the bad news is more than the good news, let me start with the good news. The good news is that we have met the constitutional timeline. Mr. Speaker, historically, the work of the Public Accounts Committee has been characterized by backlog. In fact, when we talk to our colleagues and peers across the continent and even globally, every Public Accounts Committee complains of backlog. We thank this House, the membership, the leadership, and the Secretariat for navigating so that for the second year, we are able to bring our reports before the conclusion of the 90 days deadline. Mr. Speaker, in this financial year also, all the reporting entities transited successfully from cash accounting to accrual accounting. This is the first year of 3 years. It is a transition that will take 3 years, but I'm happy that all the county government financial statements are now being produced under the accrual accounting method. Mr. Speaker, good news. The Inspector General of Police has affirmed, has asserted that this House has the mandate, the authority, and the power to direct the Inspector General of Police to produce any person, be it a governor, be it an accountant, be it a procurement officer. The Inspector General of Police has affirmed that nobody is above the law. Whether you fly a flag, whether you have someone at home you call a first lady or a first gentleman, no one is above the law. And Mr. Speaker, even if we disagree with the IG of Police on some of his methods, on this, he has positioned the Senate to where the Constitution intended the Senate to be. And I want to tell those who are hiding behind groupings and groupies, Mr. Speaker, that at this rate we'll be serving one summon, one arrest warrant per week, so that by the end of this financial year, all those people who are supposed to appear before the Senate Public Accounts Committee should have appeared. Mr. Speaker, I also have good news that the Ethics and Anti-Corruption Commission this time round has demonstrated impressive initiative. Mr. Speaker, when it emerged that 5 million was used in Vihiga for housewarming, within 2 weeks, the EACC had already summoned parties to do statements. When it emerged that 3.9 million had been used in Bungoma for lighting a Christmas tree, within 2 weeks, the EACC had swung into action. When it emerged that in Meru, 10 million was used for a boda-boda event instead of building the county aggregation and industrial park, within 2 weeks, the EACC had swung into action. Mr. Speaker, I have good news that our county assemblies are improving. In this financial year, 8 county assemblies had unqualified opinion. And Mr. Speaker, the clerks, the speakers of county assemblies, despite immense pressure from their governors, they came before the Senate Public Accounts Committee because they understand that oversight, accountability is individual, and you cannot hide behind any other grouping. Mr. Speaker, the clerk and speaker of Wajir appeared before our committee when the governor, who manages 90% of the revenue that goes to Wajir, chose not to appear before our committee. The clerk and speaker of Kericho County appeared before our committee when the governor, who had an adverse opinion, chose not to appear before our committee. Mr. Speaker, I have good news that the public is squarely and solidly with the Senate on the matter of oversight and on the matter of accountability. On to the bad news, Mr. Speaker. From Wajir to Migori, from Mandera to Turkana, every corner of this country, Mr. Speaker, we have bad manners, we have theft of public resources, we have violation of existing law, and we have bad habits, which this House was established to ensure that those bad habits do not grow root. Mr. Speaker, on the illegal position taken by the Council of Governors, I think that is not something that we need to debate, because anything that is inconsistent with the Constitution is null and void to the extent of that inconsistency. And so, those are not things for us to discuss, whether someone wants to obey the Constitution or not. We all swore to Linda Katiba, we all swore to Linda Ugatuzi. Mr. Speaker, the reports that we have presented to the House today paint a picture of poor financial management, systemic failures, illegalities, irregularities, and non-conformances, particularly on financial resource management, human resource management, and other processes such as procurement. Allow me, Mr. Speaker, to highlight some of the critical cross-cutting issues that we have reported to the House. Mr. Speaker, pending bills still pose the greatest fiduciary risk to the affairs of county governments. In this transition from cash to accrual accounting, pending bills are no longer called pending bills, they are called trade payables. But arose by any other name is still arose. Mr. Speaker, Nairobi leads the pack. In the financial year under review, Nairobi had pending bills or trade payables worth 118 billion. That's almost $1 billion in terms of obligations that are owed to various parties. Mr. Speaker, the Auditor General tells us that in that year, 43 billion worth of trade payables was paid, but the auditor was not given supporting documents. Mr. Speaker, if you pay your debt, it should be very, very easy to show that I paid so and so for supply of meat, I paid so and so for supply of fuel. In the case of Nairobi, Mr. Speaker, they were not able to provide supporting evidence for 43 billion, and that is in the audit report. And Mr. Speaker, that is the reason why we asked the Inspector General of Police to bring the governor of Nairobi before the committee of the Senate, so that we can know how 43 billion could have been paid without supporting documentation. Mr. Speaker, in that financial year, 75 billion remained as outstanding trade payables. In addition to the 75 billion, Mr. Speaker, there was 11.9 billion classified as contingent liabilities. That is money that can be paid as a result of legal disputes settled against the county. 11.9 billion. And Mr. Speaker, the Auditor General tells us that in the list of trade payables, Nairobi excluded 8 billion, which was as a result of consent entered between LAP Fund and the county government of Nairobi. Mr. Speaker, in light of such glaring irregularities and borderline illegalities, Mr. Speaker, we demand that the governor must appear before the Senate and set the record straight. Otherwise, we will make the recommendation that 43 billion paid without supporting documentation is money that has been stolen, and that the governor and his team must take responsibility. If you go across to Meru, Mr. Speaker, Meru had a pending bill of 3.4 billion, out of which 73% was greater than...
Senator Fernandi, take your seat.
Mr. Speaker, my county of Homa Bay, 1.5 billion in pending bills, half of it greater than 365 days. I urge honorable senators to take an interest. The report contains the exact amount that your counties owe suppliers. Mr. Speaker, the sad thing is that this money is not only owed to people who did brick and mortar. This money is owed to employees. And quite a good number of these counties have got outstanding employee payables. Mr. Speaker, it emerged that Trans Nzoia County, the people who worked with the outgoing government have not been paid gratuities to date. And it's not only in Trans Nzoia, it is in Bungoma, it is in West Pokot, it is in Homa Bay. It is becoming a crime and a sin to have served a past administration. Mr. Speaker, it is not proper that in the course of an employee's contract, every month some money was being deducted and set aside for settlement of gratuity. And yet, when their contract expires, money is not found to pay that gratuity. Mr. Speaker, that is theft, and we have called it as such in those reports. The other debt that counties are carrying is pensions. Mr. Speaker, counties are deducting money from employees, their pension portion, and deducting money from themselves. And that money is supposed to be remitted to pension funds. Mr. Speaker, that money in a number of counties is not there. And so counties are not able to account for pension obligations over the historical period, and some of them even during the current period. Mr. Speaker, this is a conversation that I have had with the chair of the Council of Governors before they became truant. And we agreed that this is a national crisis, Mr. Speaker. Because if you do not remit pension deductions, you are stealing from the employee, you are stealing from yourself, you are stealing from the country. You should not be called anything else than a thief. Mr. Speaker, we have made very stern recommendations in that report. Statutory deductions are not being remitted. Mr. Speaker, SHA, NSSF, KRA, and all those other statutory deductions, we have directed that counties pay statutory deductions within 90 days. Mr. Speaker, there is also the issue of trade debtors, where contractors, people who have provided goods and services, some of them have not been paid for more than 365 days. We have given strict recommendations, riding on the earlier motion that was brought to the House by Senator Ledamo Lekina, but we have tightened it further. And Mr. Speaker, we have asked the Control of Budget to ensure that all debt greater than 365 days, a payment plan is provided and strictly adhered to. And on this, Mr. Speaker, we must thank the Control of Budget. When this House passed a resolution asking the Controller of Budget not to authorize withdrawals where a payment plan does not exist, the Controller of Budget did not ask whether it is constitutional or not. The Controller of Budget insisted, and to date, before a county gets money to settle pending bills, you must demonstrate that you have a payment plan for the past bills. So I want to thank the Control of Budget for that, and I think, Mr. Speaker, it will get to a point where we'll also be asking the Control of Budget in the same spirit that counties that refuse to submit themselves to accountability, she should also not authorize withdrawals from the consolidated and county revenue funds. Mr. Speaker, let me very quickly address the issue of wage bill. Mr. Speaker, the PFM Act requires counties to spend not more than 35% on personnel emoluments. The reality is different. Vihiga is spending 52%. Bungoma, 53%. Laikipia, the county of my friend, the incoming governor, senator, 55% is going on salaries. So I can tell you, when you become governor day one, your biggest problem is how to rationalize the wage bill. Nyeri, Laikipia, Nyeri, 50% of revenues goes to salaries. Machakos, 60% goes to wage bill. Homa Bay, 55%. Mr. Speaker, we have a list of all those who are at 50% and above. The reality is that some of these counties are no longer a going concern. They've become payroll stations. Mr. Speaker, I want to thank the Auditor General that the Auditor General did a payroll audit which highlighted all these problems. And it is the intention of the Public Accounts Committee to subject all the governors to respond to the payroll audit that the OAG did. But, Mr. Speaker, there is a very interesting development coming from a decision of the High Court. It was a matter involving Matindi versus the Salaries and Remuneration Commission. Mr. Speaker, the High Court directed that by 2030, all government, all public and state entities must adhere to the fiscal responsibility principles in the Constitution and in the PFM Act. Mr. Speaker, the effect is that by 2030, any entity that is above 35% on wage bill and is below 30% on development will be deemed to have violated the Constitution. Mr. Speaker, I know it will be very difficult to implement it, but that is the law as it is. It is not a suggestion. I think the court just interpreted the law as it is. And that responsibility was given to the Salaries and Remuneration Commission to compel all state organs to come up with a plan to align with the fiscal responsibility principles. Mr. Speaker, we agree with the decision of the court, and we agree that by 2030, progressively, all counties should be at 35% on employees and 30% on development. Mr. Speaker, let me quickly address issues of project management. White elephants are all over our counties. And Mr. Speaker, with a lot of reservation, one of the biggest white elephants in our counties are the county aggregation and industrial parks. 500 million for each county, 47 counties. That is 23.5 billion Kenya shillings, Mr. Speaker, locked up in warehouses. Some have been built on swamps. Some have been built on land that is not owned by the county government, land owned by private institutions. Mr. Speaker, I want to urge, beyond the recommendations that we are going to make as a Public Accounts Committee, that the relevant committee must look into this. Mr. Speaker, we cannot allow 23.5 billion to be wasted. There must be a way of converting that into value. So far, Mr. Speaker, 3 years since the inception of this good idea, none of the counties have been able to demonstrate value for money. And I think, Mr. Speaker, this should form part of a special audit by the Office of the Auditor General, because we cannot allow 23.5 billion to be wasted. If we need to do something about it to unlock value, this House has the capacity to direct that action to be taken. Beyond the county aggregation and industrial parks, Mr. Speaker, we have seen the challenge of stalled projects that are transferred to the national government without a proper framework. In Nyandarua, the JM Karaoke Memorial Hospital was transferred from the county government to the national government. And I think it went to the military. And the military did procurement in a restricted manner. And Mr. Speaker, when you look at it, it looks all untidy. The county, which is the owner of the asset, has no visibility, has no control, is not able to answer questions regarding a project under their jurisdiction. And they refer you to the Ministry of Defense. Whereas there is nothing wrong with the national government assisting a county government to complete a stalled project, because it has been done elsewhere. Even in my county, the stadium was completed with the assistance of the national government. And in several other places, the national government is stepping in to complete hospitals. I think in Kakamega, there is an ongoing conversation. But we insist that everything must be done in accordance with the law. We insist that intergovernmental agreements must be entered into. Because, Mr. Speaker, when the land belongs to the county and the asset has been built by the national government, in whose balance sheet will that item be? We have seen cases where markets are being built on county land by the national government. The building is on the balance sheet of the national government. The land is on the balance sheet of the county government. Mr. Speaker, we must come up with a framework to guide counties on intergovernmental agreements to ensure that good things, good intentions do not result in breach of law. Mr. Speaker, another challenge is where counties exceed the ceilings that we have given as a House. For example, the governor of Nairobi is building a palatial residence at Ledinothi Nursery School at 235 million. And yet, this House gave a cap of 45 million. So what is the other definition of impunity, if not this? What other counties have done, Mr. Speaker, is where they find that that budget is limited, they have approached the Finance Committee of the Senate, and they've explained themselves so that they can get some special leave to proceed. In the case of Nairobi, Mr. Speaker, 235 million to the Nairobi governor's residence. It is far beyond schedule. We do not believe that that is value for money. And it cuts across county assemblies. Even though, Mr. Speaker, I want to urge the Finance Committee also to revisit some of these ceilings, because these ceilings, we put them in place some 4 or 5 years ago. And I've told the Council of Governors, if you want to engage the Senate, come for a conversation such as this, that you have ceilings that are unreasonable because of inflation. and the increase in cost of construction. Let's revise the limit for a governor's residence, for example, from 45 to 60 million. That is a reasonable conversation. But, Mr. Speaker, if that conversation is not had, we shall insist on the law as it is. Mr. Speaker, another danger that is creeping in, and I've seen Kakamega County Assembly is getting into this trap. Mr. Speaker, our county entities are getting into loan arrangements without the guarantee of the national government. Homa Bay started it, went to CPF, took a loan of 820 million, called it a TPS, or a tenant purchase scheme, and came up with some legislation in the county assembly. CPF built a palatial county headquarters in 6 months, 820 million in 6 months, so that it could be ready in time for the devolution conference. But what kind of arrangement is that? Because the county is paying back over 4 years, monthly installments over 4 years. How else do you define a loan? It is a loan, Mr. Speaker. A tenant purchase scheme is a loan. And the PFM Act requires that any loan must be guaranteed. And Mr. Speaker, you see some of these loans, they securitize on-source revenue. And yet the bulk of the on-source revenue is hospital fees. So when the hospital fees is not available for servicing the loan, the county is in default. And it is the ordinary citizens of that county that suffer the loss. Kakamega County Assembly, I think, are also getting into a similar arrangement for construction of the county assembly office at a very exorbitant price. And so I asked Senator Boni Khalwale to keep an eye on that, but I also ask fellow senators that when you have these kind of arrangements in your counties, let us scrutinize it with a fine-tooth comb, because some of them are going to tie your counties in debt that you'll not be able to process. Mr. Speaker, I want to be very quick so that I allow my colleagues the opportunity to speak. Let me speak very briefly about continuity of projects from past administrations. We have seen this problem in Trans Nzoia. We have seen this problem, I think, even in Narok. Narok, there's a hospital that is stuck, and yet millions of shillings have already been spent on it. In Trans Nzoia, there's a doctor's plaza that has been the subject of Senate committee visits for the last 8 or 10 years. In Kakamega, there are the referral hospitals that they've been subject of Senate committee visits for the longest. In Mombasa, there is a stadium that has been the subject of Senate committee visits for the longest. Mr. Speaker, one time, Senator Kibiru, the then Senator for Kirinyaga, brought a motion to this House on the matter of continuity of stalled projects. And Mr. Speaker, we need to revisit that resolution of the House. Let me move on to on-source revenue. Mr. Speaker, today, the county with the highest on-source revenue is Nairobi, even though our analysis indicates that Nairobi is under-collecting and at the same time under-declaring. The second highest, Mr. Speaker, would be Kiambu, even though, again, when we looked at the growth in Kiambu numbers, we realized that most of it was hospital fees. The third one, which seems to have a much more organic growth, is Narok. And Mr. Speaker, Narok have demonstrated that their park fees have increased almost by 40–50%. I think that is more organic than when the growth is coming from hospital fees. Because many of our counties are doing business with the sick. And when they get the money from the hospitals, they have come up with funny legislation where 1/4 of that money is retained at the center, and it is only 3/4 that goes back to hospitals. Mr. Speaker, we passed the health laws when we were in Turkana, and I don't think that we intended that money meant for hospitals was supposed to be used for other purposes. Money that is collected under FIF should be ring-fenced. We have also seen, Mr. Speaker, cases where automation is not a guarantor of growth in on-source revenue. And that tells you that some of these county governors and county officials have built backdoors and have put in traps in those systems for diversion of funds. We have seen counties, they put T-junctions in the systems and all sorts of algorithms to divert funds. Mr. Speaker, the Finance Committee must provide direction, I don't know whether it's Finance or ICT Committee, on the system that should be used by counties. I do not agree, Mr. Speaker. Personally, it is not the position of my committee that we should have 47 revenue collection systems, that we should have 47 parking systems, 47 hospital systems, 47 human resource management systems, 47 payroll systems. Mr. Speaker, the PFM gives that responsibility to the National Treasury to design and prescribe. And Mr. Speaker, I do not think that is micromanagement. There is no reason why 47 counties, each of them, should be spending 80 million shillings on a revenue collection system. If you look at the investment and the return, it does not make sense. And so, Mr. Speaker, we are proposing a unified system that can be deployed by county governments. You get a unified ERP that can do revenue, that can do hospital, that can do human resource management, that can do project planning and monitoring. Mr. Speaker, it is possible to do so. On source revenue, we have seen cases where, in reality, money is collected from Wananchi, but that money does not get to the county coffers. One good case is Kitui. Mr. Speaker, in Kitui, when we looked at the numbers, it looked like only 5 trucks were paying cess on a daily basis. But if you look at it in reality, almost 200 trucks pay for cess on a daily basis. And the question was, where does the money go? And of course, they'll give you stories about climate change and about banning of sand harvesting and about riots and all sorts of things. But Mr. Speaker, in the case of Kitui, we have caused an investigation to ensure that the monies collected from people doing sand business can be accounted for. There's also the issue of unrealistic finance bills. Bungoma County passed a finance act and said they were going to sell fertilizer to farmers at a subsidized price of 2,500, consistent with the national policy. And then at some point, the governor decided that he's a generous man, and because they had just lit up the Christmas tree, he decided to give the fertilizer for free instead of charging the 2,500. And Mr. Speaker, the tragedy is that the assembly that passed that law was in the room, and they defended the governor. If we come up with a finance bill and impose a tariff, let's make sure that we observe that tariff. Moving quickly, Mr. Speaker, we have seen weaknesses in governance and internal controls. Quite a number of our counties still do not have functional audit committees, they do not have internal auditors, and they have not approved their audit charters. We have made recommendations in accordance with the law. And Mr. Speaker, under internal controls, we have also called for the National Treasury to come up with a unified county management system that can capture all the facets and all operations in county governments. As I conclude, as I come to the end, Mr. Speaker, we have also flagged out negligence of professionals. And I want to thank the Institute of Certified Public Accountants of Kenya. Right now, there's a representative from ISPAC, a very highly qualified accountant called CPA Tunga, who has been very useful to our committee in terms of giving us direction and professional opinion on matters. And Mr. Speaker, where we have found professionals to be negligent, and some of our conversations have gone viral, Mr. Speaker, where we are asking for the persons who sign financial statements. We have put the fear of the Lord in people who are signing financial statements. I think the senator from Kajiado can recall when the receiver of revenue report, nobody wanted to own it because they knew that they did not have the professional capacity. And so, Mr. Speaker, we are seeing an improvement in the rigor and vigilance of professionals as a result of the spotlight that we have shown on them. But we have made recommendations that the Institute of Accountants, the Institute of Human Resource Managers, Institute of Supply Chain Managers, the Law Society of Kenya, and the Engineers Registration Board should take disciplinary action against their members who are found to have breached the law. Mr. Speaker, one painful thing which Senator Abbas referred to my committee was the issue of emergency relief procurement. Mr. Speaker, that is another black box that is used to loot public resources. You saw the Governor Mandera could not account for 56 million that was used to plant trees. And when we called it out, he was very angry and he went out there saying that we were harassing him. Emergency relief procurement is being abused. The Devolution Committee did a report and forwarded it to the Public Accounts Committee, showing the variances in prices of simple things like cooking oil, things like flour, things like maize, beans, and rice. Counties that are neighbors, you find differentials of 50%, 100% for the same quantity or for the same item. And Mr. Speaker, the ingenious thing that they've put in is something called water tracking. Water tracking. Hundreds of millions are spent on water tracking. And you cannot confirm that this water was delivered to a cow, a camel, or to a human being. So all you do is to get records showing some signatures. Mr. Speaker, one county, represented by Senator Dulo, spent money on supplements for wild animals because they argued that the wild animals are a tourist attraction and a revenue generator. And so how do you write a report saying that zebras ate 50 million and gazelles ate 20 million? So, Mr. Speaker, emergency relief supply is a crime scene. And this Senate must call it as such, and we must direct the EACC and DCI to have keen interest on that. And I thank Senator Bass, because when when a statement came from Senator Chute, Senator Bass called these governors, and he realized that the crime there was so deep that his committee was incapable of unraveling it, and he asked us to invoke the EACC and DCI, and we shall do so, Mr. Speaker. Let me finalize by just saying one or two things about the county assemblies. The county assemblies, Mr. Speaker, as I indicated, are doing better. In fact, I foresee a situation, Mr. Speaker, where half of the work we do in Nairobi will be done competently at the county assembly level. The county assembly of Kakamega has impressed us, because Kakamega County Assembly, every time their governor or their clerk and speaker comes before us, they come with a report of the county assembly already adopted. Now, Senator Boni Khalwale, I do not know whether it is your influence, but I suspect it is the influence of Senator Boni Khalwale, because he was the founding chair of the Public Accounts Committee of the Senate. Kakamega has impressed us. Makueni has also impressed us as a county assembly. And I think there could be 2 or 3 others that have shown good financial discipline, good financial management, and some keenness when it comes to issues of oversight. There's only one thing where we disagree with the county assemblies. It's the issue of CAF, County Assemblies Forum, and the Society of Clerks at the table. Mr. Speaker, the law as is has no framework for putting public money into a private association, because there's no way to oversight it. But we believe that we must strengthen CAF. We believe we must strengthen SOCAT, Mr. Speaker. And so we have invited CAF and SOCAT to appear before us to work on a framework. I know there's a law that this House has passed, which is in the other House. But, Mr. Speaker, when I was chairing devolution committee after Senator Kinyua, I brought a similar amendment to this House almost at the same time. The poison in that amendment is that IGRTC wants to be a commission, and that COG wants to be strengthened, and that CAF also wants to be strengthened. So we have mixed 3 things that sometimes have got different and opposite energies in one bill. We have invited SOCAT and CAF to find out how we can work together, because, Mr. Speaker, I believe that a strong CAF, I believe that a strong SOCAT is good for devolution. Mr. Speaker, our recommendations are as follows. There are counties and governors that appeared before our committee, and that was, I think there were about 16. There were 16, Mr. Speaker. These counties that appeared, first of all, we want to commend the governors, because they understand, they understand that oversight is a constitutional mandate. We have done very detailed reports, Mr. Speaker, in volume 1, and we have given them 90 days to come up with an implementation framework on the recommendations that this House hopefully will adopt. Mr. Speaker, there was one county that had an unqualified opinion, and we are proud that it's a county led by a former member of this House. That is Makueni County. The committee commends Makueni County for an qualified opinion. It does not mean that there are no issues of lawfulness and issues of effectiveness. Those are still there, but they are able to prepare their financial statements in the required standards. 8 county assemblies also had unqualified opinion, and, Mr. Speaker, I hope that the House will join us in commending them. Then now we have the truants, Mr. Speaker. There are counties that we summoned, and the summons, some of them were running, they were supposed to appear before us yesterday. They did not respond to our summons. They did not appear, They did not even write to explain why they were not appearing. Mr. Speaker, for these counties, and I'm going to name them, we are recommending that we impose the highest fine available under the Parliamentary Powers and Privileges Act. We impose a fine of 500,000. Number two, in line with the statement by the Majority Leader 2 weeks ago, we adopt the report of the Auditor General as is. That is our recommendation. Number three, we will give them 30 days to come before the Senate and present an implementation framework on the recommendations of the Office of the Auditor General. Failure to which, if they do not do that within the 30 days window, the DCI, the EACC, and the DPP shall take the necessary action. We have also recommended that if they fail to do so within the 30-day implementation window, that they be prosecuted for violation of the Parliamentary Powers and Privileges Act. And if convicted, Mr. Speaker, if convicted, that they be declared unfit to hold public office as a result of violation of the Parliamentary Powers and Privileges Act and violation of the Constitution. Mr. Speaker, the list of shame includes Murang'a, Marsabit. Sorry, the list of shame includes, let me start again, the governors of Garissa, the governor of Nandi, the governor of Homa Bay, the governor of Migori, the governor of Kirinyaga, the governor of Isiolo, the governor of Tharaka Nithi, the governor of Nakuru, the governor of Kisumu, the governor of Baringo, and the governor of Mombasa. These 11 governors defied the summons of the Senate, and we are making recommendations for their fine, that we are adopting the report of the Auditor General as is, and giving them a 30-day window to come back with an implementation framework, failure to which we shall take the files directly to the EACC, DCI, DPP, and if the House deems fit, we shall issue arrest warrants to compel their production before the Senate. Mr. Speaker, the next category are entities and governors that we summoned, but they wrote seeking an extension and gave reasonable explanation as to why they could not appear. Mr. Speaker, we had to bring a report to the House. And so, since we did not have adequate time to reinvite them, we have adopted the report of the Auditor General as is. We have given them 30 days to come up with an implementation framework, failure to which the DCI, the EACC, the DPP should take necessary action, failure to which they should be prosecuted for violation of the Parliamentary Powers and Privileges Act, and upon conviction, declared unfit to hold public office. Mr. Speaker, those counties are as follows, and you notice that on this we have waived the fine of 500,000, but these counties are Murang'a, Marsabit, Wajir, Kiambu, Lamu, Nyamira, Uasin Gishu, Busia, Kisii, Kajiado, Kakamega, Siaya, Taita Taveta. There are 13 counties. The only difference is that we didn't impose a fine, because at least they corresponded with the Senate. There is evidence in writing that they sought for variation of the dates. But the first 11, Mr. Speaker, didn't care. The first 11 did not care. Now, let me just go to the other one. Now, Mr. Speaker, there is one county that had an adverse opinion. We invited the governor, he didn't come. We invited him, he didn't come. We summoned him yesterday, he didn't come, he didn't write, he didn't seek leave, he didn't provide any explanation why he could not appear before the Senate. This county is Kericho County Executive. Mr. Speaker, where a county gets an adverse opinion, it is an indicator that there are persistent material breaches of the Public Finance Management Act. We have therefore recommended to the House, we impose the fine of 500,000 on the Governor Kericho, adopt the report of the Auditor General as is, give 30 days for an implementation framework, failure to which the DCI, the EACC, DPP to take necessary action, the governor be prosecuted for violation of the Parliamentary Powers and Privileges Act, and upon conviction, be declared unfit to hold public office. For Kericho, Mr. Speaker, we have added a recommendation to urge the Cabinet Secretary in charge of the National Treasury to invoke Article 225 of the Constitution to stop the transfer of funds to Kericho until they put in place proper mechanisms to ensure that the money we are sending there is properly taken care of. Mr. Speaker, finally, Samburu and Nairobi. Yesterday, the police was busy looking for them all over. And Mr. Speaker, we hope the police will find them. We invited them, they didn't come. Re-invited them, they didn't come. Issued summons, they ignored. Summoned them again, they ignored. And so we asked the Inspector General of Police to find them and bring them before the Senate. And Mr. Speaker, I want to laud the Inspector General of Police for making an effort yesterday. I think he might need to talk to some of us because we know the whereabouts of the governor of Nairobi. He was seen within the presence of Parliament today. So for Nairobi and Samburu, Mr. Speaker, for Nairobi and Samburu, because we had already fined them, so we are not recommending to fine them again. But one thing that the committee insisted on is that the arrest warrants subsist. It's still on. And so the IG, please look for these characters until you find them. We have also recommended adoption of the OAG report as is. We have directed a 30 days implementation framework, failure to which the DCI, EACC, DPP should take necessary action, prosecution for violation of the Parliamentary Powers and Privileges Act, and upon conviction, they be declared unfit to hold public office if convicted of violation of the Parliamentary Powers and Privileges Act. Mr. Speaker, broadly, those are our recommendations. And Mr. Speaker, I want to thank you. I want to thank the clerk of the Senate and the Secretariat that since January, this committee has gone through 188 reports to be able to bring something to the House. And we want to promise that we shall get better with time. We'll bring our reports earlier. But we also hope that the people to whom we are sending money will be more cooperative, more collaborative. This delay has been occasioned by the truancy of the governors that forced us to issue 29 summonses yesterday. Mr. Speaker, I want to thank all the other agencies involved, the Inspector General of Police, the EACC, the DCI, the DPP, and generally the members of this House. Accountability is not an option. We all swore to defend and protect the Constitution, and we have a responsibility to Kenyans to do so. I also want to hail the founding fathers of this House. And Mr. Speaker, allow me to make a special mention of Senator Boni Khalwale. When we were agonizing on implementation of Article 225, we found that there was already jurisprudence. Because in 2014, we were in a similar situation. We had similar problems. So Senator Boni Khalwale and those who were in this House at that time, thank you for establishing that jurisprudence. My disappointment is that some of the people who succeeded him as the chair of the Public Accounts Committee are the biggest truants today. I still wonder, what happens when one becomes a governor? What happens when one leaves this House? And so, thank you, Mr. Speaker. I beg to move, and I want to request my very able Vice Chair, Senator Mwaruma, to second. Thank you, Mr. Speaker. No, you can mention it.
Thank you, Mr. Speaker, for this opportunity.